It's a view from the floor here at the New York Stock Exchange, and I'm joined by a very special guest from UBS. We have Ryan Rosegarten here. And Ryan, I want to get going by starting about what's currently happening in the market right now.
Sure.
Do you see a sprint when the year comes to an end?
So we do. Currently, there's roughly $6 trillion of liquidity on the sidelines, yielding less than 4%. And as rates move lower, we think some of that money makes its way into the equity market. So we're expecting some dip buying in regards to a fear of missing out or investors that have underperformed this year. And lastly, investors not looking to take capital gains between now and the end of the year. So a culmination of those things, we see markets potentially grinding higher here.
On the contrary, could you see a pullback to end the year?
So based on the rise we've enjoyed thus far this year, pullbacks are normal. We can see a garden variety correction at some point. That being said, we would look at this more as a valuation reset than really a change in fundamentals, because we're still constructive. Earnings continue to deliver. The job market is softening, which supports the Fed potentially lowering rates. AI productivity trends are real, and the consumer is still spending money, especially as we're heading into holiday season.
Equal is always better than full. Is it time to get the long S&P equal weight going?
We think so. So the equal weight index has underperformed the market cap weighted index by roughly 7.5% this year. And if we look at that from a PE multiple standpoint, trading at roughly a 24% discount, which is the steepest we've seen in 5 years. So for us, we do think equal weight, as other parts of the market catch up, we think equal weight should also catch up, not just the mega cap names that we've all grown to know and love.
You mentioned AI earlier. Earnings report recently came out. What is your general stance on AI?
Yesterday seemed like the day that everybody was keeping their eyes on. AI is providing the largest capital expenditure ever. And the demand for data centers, for power generation, for grid connectivity, for fiber optic networks are offering investment opportunities outside of just technology. It's industrials, it's infrastructure, it's energy. So AI is definitely not a passing trend. We think it's here to stay.
Other than AI, looking ahead to 2026, what is UBS kind of focused on?
Yeah, so we also like financials in light of the deregulation environment that we're likely heading into. We think financials look compelling. Also, if rates continue to move lower, it's just going to foster a more borrow-friendly environment. And healthcare. We have an aging population. As technology continues to advance, people are living longer. So these are areas of the market that we want to position ourselves for the long term, as that aging population relies on more technology and services around that we can also leverage.
Ryan, thanks so much for the time.
Thanks so much for having me.
All right, and that'll do it for us here at the New York Stock Exchange. I'm Michelle Yu. We'll see you next time here on Asset TV.